IGST. This terminology, that is location of supplier, is defined in the Act, but it is defined only for services. It is not defined for goods. Place of supply, there are detailed provisions from section 10 to section 13 of IGST Act. And the terminology recipient of supply is also defined. We will deal with each of these in the next few minutes. There may be cases where there will be an overlap between place of supply and recipient of supply. That is to say that your recipient of supply location becomes your actual place of supply. But there are many other cases where that is not true. The recipient of supply may be in a different state and the place of supply may be in a totally different. And this creates a lot of interdependency on all these three concepts or all these three phrases. We'll deal with them each one by one. The GST Act, and also similarly defined under section 215 of IGST Act. It is defined for services, as I will. For goods also, we'll have to take cue from this definition only. There are 4 parts to it. The first part says if a supply is made from a place of business for which registration has been obtained, your location of supply. The second clause says that if a supply is made from a different place which is not registered for establishment, then such combination of A and B, it says that if a supply is made from more than one locations, then you have to identify the establishment which is most directly concerned with the provision of supply. This is very crucial over here. This is because in our various business models, there could be multiple locations in different states involved in giving or providing a particular supply to the customer. There may be marketing team in one state, there may be billing team in another state, and the operations team in a third state. So all these business what is the location of supplier, and that is where this definition and also various aspects like the contracting location, the performing location, the location from where the goods are being dispatched, or also in many cases the nature of activity determines what is the location of supplier. And then we have to lead to a conclusion to identify that which supply is most directly concerned with any particular, that which location is most directly concerned with any particular supply. If your situation does not fall in either of the above 3 cases, then the residuary clause says the location of usual place of residence becomes the location of supplier, where usual place of residence is defined to be for an individual a location where he is residing, and for a non-individual for a location where the company or the organization is registered. All these 4 clauses have to be read, specifically the first 3 have to be read very cautiously in each situation to determine what is my location of supplier, because that is the starting point to determine whether my supply is actually an interstate supply or an intrastate supply. Without the location of supplier being identified, we cannot move ahead in any particular transaction. The term place of supply is also, the place of business is also defined under section 285 of the CGST Act. It broadly says that any place from where the business is carried on, like the warehouse, the godown, or even the location where you store, where you maintain your books of accounts, can be a place of business. And it also includes a location. If you are carrying out business to an agent, then the place of business of the agent can also become your place of business. Hence, this definition has to be read along with the definition of location of supplier to identify that whether you are providing supply from what location. Thereafter, the definition of fixed establishment is given under section 2, subsection 50 of CGST Act, which says that it means a place which has a sufficient degree of permanence along with your technical or human resources to either provide a supply or to receive a supply. So this definition again again becomes very important. If I go back to the earlier slide, the underlined portion clearly says that you have to identify either the place of supply or the fixed establishment. Hence, in any given business transaction or a situation, you have to identify whether your supply is being made from what place of business or from what fixed establishment. Thereafter, the term recipient, again, it is defined under Section 293 of GST Act. The first clause anchors on the person who is liable to pay consideration. If in any given situation, the person who is liable to pay consideration becomes the recipient of supply. If a transaction does not involve a consideration, then for goods, it is clearly said the person to whom the possession of the goods is given, and that person is said that for where no consideration is involved, then the person to whom the service is rendered, again, here becomes the recipient of supply. So all these three terminologies, location of supplier, place of supply, and recipient of supply, as I said earlier, are very, very important to determine whether my supply is interstate or interstate. Section 7 and 8, which broadly deal with the concept of intrastate and interstate supply, has defined that if a transaction takes place between if a transaction takes place within the same state or within the same union territory, then such supply is said to be intrastate supply, and therefore we say that CGST plus SGST is applicable. Thereafter, Section 7 also says that if there are certain deeming provisions, of course, it says that if there are the location of supply and place of supply in two different states or union territories, then that supply is interstate supply. However, it creates a deeming provision for certain special supplies. It says for import transactions, that is import of goods and import of services, by default, it is an interstate supply. You need not identify, you need not consider whether it is interstate or interstate. By default, it says it is an interstate supply. That is why in all our bill of entries, which we file for at the time of import of goods, by default, we have to pay IGST. And similarly, for import of services, we pay GST under RCM, that is, we pay IGST under RCM. Thereafter, for export, again, it is said it is an interstate supply, but of course, we know it is zero rated to Section 16, either under LUT or with payment of taxes. Thereafter, the next clause says that supplies to SEZ unit are also zero rated, similar to exports. Then there is a residuary clause which says that if a supply is not covered elsewhere, then by default it becomes an interstate supply, and therefore IGST is applicable. Now, to understand the concept whether what tax is payable for territorial water, we know India is defined in Section 256. It says that India extends beyond the land area, that is the territorial waters, also the continental shelf also. Territorial waters, as we understand, is up to 200 nautical miles from the Indian baseline. The area up to 12 nautical miles from the baseline is said to be the state jurisdiction. And the area from 12 nautical miles to 200 nautical miles is said to be central government jurisdiction. And that is where a distinction is created in the territorial waters also to identify whether your supply is interstate or interstate. We'll understand this better with an example. This is the left-hand side becomes your territorial waters, and the area up to the 12 nautical miles is said to be the state jurisdiction. So in this case, let's take an example where Mr. A is supplying goods to Mr. B, which is within the 12 nautical miles from the baseline, and the supply which is happening is more closer to the baseline of Maharashtra state, and therefore such supply will attract CGST plus SGST of Maharashtra. The Section 9 clearly says that for all supply in territorial waters, if it is within 12 nautical miles, then such supply is to be treated as an intrastate supply. If it is beyond 12 nautical miles, then it is to be treated as an interstate supply. Also, just to understand in a much better way, if Mr. A is supplying goods to Mr. C, who is also within 12 nautical miles, but his the location in territorial waters is more closer to Gujarat, then again this supply will be treated as an interstate supply. As I said, when the supply happens between 0 to 12 nautical miles, you have to look that which state is closer to such location. The territorial waters location within 12 nautical miles, which is closer to the baseline of the state. If it is closer to Gujarat state, then the place of supply will become Gujarat. If it is closer to Maharashtra state, then the place of supply will be Maharashtra. So in this example, Mr. A, when supplying goods to Mr. B, Mr. A is in Maharashtra, he supplies goods to Mr. B in Maharashtra. Here, I mean Mr. B, who is actually located in territorial waters, but it is closer to Maharashtra baseline. That is why it is an intrastate supply. When we come to Mr. C, Mr. A, who is in Maharashtra, supplying goods to Mr. C, again in territorial waters, but at this time, the territorial waters is where Mr. C is located is closer to the Gujarat coastline. And that is where this supply, the location of supplier becomes Maharashtra and the place of supply becomes Gujarat, and it is said to be an interstate supply. Thereafter, when we move beyond 12 nautical miles, that is up to 200 nautical miles, the law by default says that it is an interstate supply. So in this example, say Mr. A supplying goods to Mr. D beyond 12 nautical miles, irrespective whether it is closer to what state. Once it is beyond 12 nautical miles, it becomes a central government jurisdiction, and by default, interstate supply has to be classified and IGST is applicable. Now we'll move to understanding each of the place of supply provision. First, we'll deal with the provisions of goods. The place of supply for goods is defined in section 10. It broadly classifies into 5 different baskets. It anchors on the movement of goods. So the first provision says that if any supply involves movement of goods, then the location where the delivery terminates becomes your place of supply. So say in an example where Mr. A in Mumbai is supplying goods to Mr. B in Pune, and the delivery terminates in the state of Pune, then since the location of supplier and the place of supply being the delivery location, are in the same state, by default, that such supply becomes an intrastate supply and C plus SGST is applied. Similarly, if Mr. A in Maharashtra is supplying goods to Mr. B, say in Madhya Pradesh, and delivery terminates in Madhya Pradesh, then the place of supply becomes Madhya Pradesh, and therefore it becomes an interstate supply and IGST is applicable. So as you see, we anchor on the location of supplier, Mr. A, and the place of supply, that is the delivery location. In all cases, you have to anchor on these two terminologies only to determine interstate versus intrastate. The second subclause deals with a situation where, I'll take this with an example, say where Mr. A, who is in Maharashtra, is has given instructions. Mr. A in Maharashtra is instructed by Mr. B to deliver goods to Mr. C. Now Mr. B is also in Maharashtra and Mr. C is in Kerala. So what will happen is Mr. A, when he sends goods, he will say bill to Maharashtra, that is Mr. B, but the goods will be delivered to Mr. C in Kerala. So section 10(1)(b) specifically is for all such situations. It says that in all such cases, the place of supply will be the location where the person who is giving instruction is located. Now in this case, Mr. B has given instruction to Mr. A to deliver the goods to Mr. C. So Mr. B's location becomes the place of supply by default. And therefore, though the goods are moving interstate, that is from Maharashtra to Kerala, this supply will be said to be an intrastate supply because location of supplier is in Maharashtra, that is Mr. A, and by default, by virtue of section 10(1)(b), the place of supply is also the location of Mr. B, that is Maharashtra, and therefore it is C plus GST plus SGST. Again, taking a different example where Mr. B, who is the corporate office located in Madhya Pradesh, gives instruction to Mr. A in Maharashtra that he has to deliver goods to the factory of Mr. B, which is in Punjab. So again, Mr. B is in Madhya Pradesh, Mr. A is in Maharashtra, and Mr. B's factory is in Punjab. So again here, because there are three different locations involved, we have to anchor on the person who is giving instruction to determine the place of supply. So Mr. B here, the corporate office of Mr. B, which is located in Madhya Pradesh, is giving instruction to Mr. A. Therefore, the place of supply becomes a Madhya Pradesh, though the goods are delivered in Punjab. And therefore, here in this case, because location of supply is in Maharashtra and the place of supply being the person giving instructions location is in Madhya Pradesh, it will be IGST. Now, the corollary of this is that in both the situations, if we see, Mr. B is required to do a separate invoice of IGST, though he has not actually delivered the goods, though he has not actually effected the movement of goods, but he has given the instructions. And therefore, when Mr. B raises, in the first case, when Mr. B raises invoice on Mr. C, he will charge IGST because effectively the goods are delivered to Kerala, but under the instructions of Mr. B that the goods have to be delivered in Kerala by Mr. A. Therefore, it will be an IGST supply. Thereafter, the next clause says that if there is a supply which does not involve movement of goods, then in such cases, the location of goods becomes the place of supply. We'll deal with examples also. I'll just quickly run through with the basic provisions. The fourth clause says that if a supply involves an activity of installation and assembling at a particular site, a supply of goods which involves, for example, lifts is a common example, which involves installation or assembly at a particular site, then such location of installation becomes the place of supply. And lastly, if a supply of goods is made on board of a conveyance, that is to say a vessel or an aircraft or a train, and the location at which such goods are taken on board becomes the place of supply. Now let's take an example of each situations. Now firstly, the situation where the goods does not involve movement of goods. Now in this case, Mr. A, who is a commodity trader, and Mr. B, who is also a commodity trader, Mr. A located in Gujarat and Mr. B located in Maharashtra. Both these parties have contracted for sale of goods, but the goods are lying in a warehouse in Gujarat. Now here the sale happens only to transfer of title. There is no movement of goods. Goods will continue to lie in the warehouse of Gujarat, and Mr. A will just issue an invoice and transfer the title to Mr. B, though there is no movement of goods. Now here, even though both these parties are in two different locations, here, since the supply does not involve movement of goods, you have to anchor on the location where the goods are located at the time of delivery. So in this case, the goods does not move. Goods are in the warehouse itself, which is in Gujarat, and therefore this warehouse location becomes my place of supply, and this supply becomes an intra-state supply because the location of supply and place of supply both are in same state, and C plus SGST is chargeable. Now, if you observe here, the recipient and the place of supply, just like in our earlier situation, they are in two different locations, and that is where, as I said, in all cases, the recipient of supply and the place of supply may not be same. You need to specifically identify in each case what is whether the recipient of supply and the place of supply both are same or not. Next, this situation is with respect to the goods being assembled or installed at a particular site. Now, Mr. A in Maharashtra, who is a builder, has a construction site in Bangalore. He has the builder in Maharashtra has given a contract to an elevator supplying agency, that is Kone Elevators, to install a lift to his construction site at Bangalore, which is Karnataka. So here again, though both the parties are in the same state, that is the contracting party, which is the builder, and the Kone Elevators, both are in the same state, that is in Maharashtra, but the installation of elevator is happening at a site in Bangalore, and this specific provision says that in all such situations, the installation location becomes your place of supply. Therefore, in this situation, IGST has to be charged by Pune elevators. The bill will be raised again on the builder who is in Maharashtra. IGST will be charged with place of supply Bangalore. The next case, it deals with when the goods are supplied on board of a conveyance. Say this specifically situation where, say for example, an aircraft which is going from Mumbai to Goa. Now, a trader who has loaded his goods, say toys or magazines, which are to be supplied on board to various to the passengers, has loaded his goods from Maharashtra before the aircraft departs. Now, when the aircraft has started, once the aircraft has taken off, and say it is just about to reach Goa, or of 10-15 minutes before it is about to reach Goa, it is still in the territory of Goa, and a supply transaction of the sale of the toys or the magazines takes place on the board of the aircraft. In all such situations, though the aircraft may be located in Goa, the place of supply provisions section 10(1)(e) by default says that the place of supply will be the location where the goods are taken on board. So here the goods were taken on board in the state of Maharashtra, and therefore the Maharashtra trader will charge CGST plus SGST. Your place of supply becomes Maharashtra, and the trader is also located in Maharashtra. This is where the provisions of goods come to an end. So, friends, if we all see that there are various situations for goods itself and services, we will see that there are many such various different situations. In all cases, we have to specifically identify whether what is the place of supply in each situation depending on the type of transaction. Now, under services, there is one general section, which is section 12, and there are various provisions which are specifically dealing in different types of businesses or situations. So, firstly, we have to see whether the services which I am providing fall under those specific situations. If yes, then the specific provisions will prevail over the general provision, and we have to depend on those specific provisions only. If your supply of service is not falling under this specific provision, which is going to be in the next few slides, then you have to come back to this general rule of section 12, subsection 2, and then you have to determine what is my place of supply. So 12 subsection 2 says if the service is provided to a registered person. It is very simple. It says if a service is provided to a registered person, then the location of such registered person becomes my place of supply. So here it's straightforward. The place of supply provisions straightforwardly anchors on the location of recipient to be place of supply, and that is where identifying who is the recipient becomes important. If you are providing service to an unregistered person, then you have to check whether you have the address on record. Yes, then such address becomes your place of supply. If you don't have the address on record, then by default the location of supplier itself becomes the place of supply. And in all the last case which I've explained, that is, if you don't have the address on record also, by default in all such cases it will be an intrastate supply. So general rule is very simple. It says that if the recipient is registered, then such recipient's location becomes the place of supply. If not, then first check whether you have the address on record. If yes, then such address on record becomes your place of supply. If no, then the location of supplier by default becomes the place of supply. Now we start understanding the various specific provisions which we have for services, supply of services. The first provision is with respect to immovable property. Now here, why do we have a special provision for immovable property? This is because the government somewhere believes that immovable property is a land-related service. That is probably your hotel accommodation or your renting. It is a land-related service, and therefore the revenue should flow to that state where the land is located, and that is where a special provision is carved out for immovable property. So clause A says that if you are providing a service which is directly in relation to an immovable property, like your architect services, your engineer services, or your surveyors, or even for the purpose of rent, which is directly relation to an immovable property, then in all such cases, the location of immovable property becomes your place of supply by default. Say, for example, I may be located in, say, Maharashtra. I am providing an interior designing service for a hotel, say, if it's located in, or any other residential property or commercial property which is located in, say, in Delhi, then my place of supply will by default become the location of such immovable property, which is so. Clause A specifically has certain examples also, but it is a very wide concept because it says property. So in relation to, it would by default, there are various decisions which have said that in relation means there has to be some excess of the activity with the immovable property. Therefore, in each case, you have to see whether your activity has some relation with the immovable property. If yes, then your place of supply will be as per section 12. Thereafter, clause B specifically said that a composite of organized religious events or even business, such organizing of the meeting, then such for all such cases, the place of supply will by default be the location of the immovable property, that is where the accommodation is happening. Thereafter, clause, the last residuary clause says that if there is any ancillary service which is being provided along with the clause of A, B, and C, then in all such cases, such ancillary service will also be the location where the immovable property is located. So here there are specific carve-outs. We have to understand that where the property is located and whether my service is directly in relation to such property. If yes, then your place of supply becomes the location of such property. Again, here there is a specific proviso which says that if you are providing services to an Indian customer, but the property is located outside India, then by default your place of whole property is located outside India, but your customer is in India, then the property's location is not important. Then you have to again go back to something similar like the general rule and look where your customer is located. Thereafter, section 12, subsection 4 specifically deals with performance based activity. Here again, I feel that the intention is that the government wants to probably decide that the consumption is happening in the location where the performance is happening, and therefore the revenue should go to that state where the performance is happening. And that is where a special carve-out is made for services like restaurant, catering, fitness, personal grooming, beauty treatment, or even health services. So if you are providing services which fall under these categories, then you have to look at the location where you are performing the services. So that is why where we see that in all such cases, the restaurant, even if I give my GST number to the restaurant, and I may be in a different state where the restaurant is not located, but the restaurant will by default charge me local CGST plus SGST. It will not charge me IGST even though I give him a GST number for different state. Similar concept applies to the catering services, personal grooming, fitness, and all the listed services. Thereafter, the separate carve-out is for training and performance appraisal services. Here again, now here there is a hybrid mechanism provided. It says that if the training is provided to a registered person, then you have to go back to something similar like a general rule, that is the location of the such registered person. If you are providing services to an unregistered person, then you have to look at the place where you are performing. Now here again, probably the government believes that this is more in the nature of a B2B transaction, and therefore the credit should be flow. Earlier services like probably the restaurant services mostly happens in a B2C cases, and therefore there the credit is not required to be flow. Now, in such cases where in section 12 or section 5, when we are dealing with training and performance, probably where the government feels it is a B2B service, the credit should flow, and therefore there is a hybrid mechanism. It says that if you are able to identify the registered person, then the location of the registered person becomes your place of supply, and accordingly you have to determine your interstate versus interstate. If you are providing service to an unregistered person, then by default your location where you are performing the services, that is the training or performance services, becomes your place of supply. And again, here it is again similar to a performance-based basket where it says that events like your educational event, entertainment event, or sporting, scientific, cultural, or your artistic events, even amusement park, for all such cases, by default, it says the location where the event is happening becomes your place of supply in a different state, but the place of supply will by default be the location where the event is happening. In most of such cases, it is possible that the service providers may charge you C plus S GST. Also, there is a term which is used in this section, which is ancillary services. It says that ancillary services to all such events will also fall in the same basket. Thereafter, section 12 plus section 7, which is in relation to organizing an event. Now, here it is important to identify whether, if you are in this business line, you have to identify whether your services are in the nature of admission to an event or an organizing to an event. Because admission to event was under section 12 of section 6, which we dealt earlier, and organizing an event is under section 12 subsection 7. Here also, because it is a hybrid mechanism, just like training and appraisal. So we have to be very careful in identifying whether my services are admission or organized. Here it says that all such events like artistic, cultural, sporting, if I am providing this event organizing services to a registered person, then the location of the registered person will be my place of supply. And if I am providing my services to an unregistered person, then by default the location of such event has to be my place of supply. Here again, it is said that the ancillary services to such organizing an event will also be a part of the same provision. And so an event has many activities along, because an organizing an event has many other ancillary activities also. So all such ancillary activities will take the color of the organizing of an event, and therefore the same place of provisions concept will apply. Now, then we deal with transportation of goods. Here, again, it is a hybrid mechanism. It says that if you are providing this transportation service, now this specific rule is carved out for various transport business lines like your GTA, freight forwarders, your shipping lines, your airlines. So here who are dealing in cargo. So here it specifically says that if the transporter is providing service to a registered person, then location of such person by default becomes your place of supply. However, if he is providing service to an unregistered person, then the location at which the goods are handed over becomes the place of supply. So you have to be very careful, because each situation, each type of activity has a different implication if you are specifically in hybrid mechanism, if you are providing services to an unregistered person. Now, thereafter, after this 1.5 to 2 years after GST law was brought in, a specific proviso was brought in this section. It says that where the transportation of goods is to a location outside India, then by default the place of supply will be the destination of such goods. Now this proviso was brought in to probably give a tax neutral situation. That is, the government did not intend to tax the transactions when the goods are going outside India, because when goods are going outside India, it is a situation of an export of goods. That is where the intention was somewhere to not tax such transactions, because ultimately the exporter will either claim a refund or he will unnecessarily have to bear the cost. So in all such, to promote the exports, the government thought that we will change this provision and say that if the transportation of goods is to a place outside India, the place of supply shall be the destination of such goods. Now, effectively, this provision has not helped in many cases, but of course, this is very specific to this industry. Thereafter, for passenger transportation, again, we have a hybrid journey. Here again, it is somewhat similar to the goods transportation situation. It says that where services are provided to a registered person, then the location of such person becomes place of supply. And if services are provided to unregistered person, then the location where the journey starts, it is embarkation point, becomes your place of supply. Here again there is a proviso. It says that where the right to passage, that is a contract for transportation, which has been entered for a future use, and if you don't know that what is my point of embarkation, then by default again it says you have to go back to general rule. Now this is a very specific situation. So, and also it says that for the purpose of this subsection, if the return journey is treated as a separate journey, then again the right to passage for onward and return journey is to be issued the same. So it says that even if I say a book a ticket for the return journey, say a flight ticket for Mumbai to Delhi for going to Delhi and coming back, if I book the ticket for return journey, but this provision says that each transaction, though I book the ticket at the same time, probably with the same airlines also, but each journey has to be looked at separately, and accordingly the place of supply has to be. The onward journey and the return journey, for both the situations, the respective embarkation point for unregistered persons will be the place of supply. Thereafter, section 12, subsection 10 deals with on-board services. Again, it is a specific situation where services are provided on board of a conveyance like your vessel, aircraft. In all such cases, it says the first scheduled point of departure becomes your place of supply. So, say for example, I may again similar to which example which you took under the goods, section 10. So, if a cruise going from Mumbai to Goa, and there are certain services like your restaurant services being provided on board of such cruise, and by default the first schedule, now the cruise may be in territorial waters, but it may be about to reach Goa, even though the vessel at that time is in Goa, and by default this provision says that place of supply will be the first scheduled point of departure, which is say Maharashtra, which is Mumbai, and so accordingly the place of supply will be Maharashtra. After this, again, is a specific basket for telecommunication services. It says that there are 4 baskets. It says that for fixed telecommunication lines, lease circuits, internet lease circuits, and the dish antenna, again, and also the cable services, the location where such installation is done or the receipt of services becomes your place of supply. For all postpaid mobile or internet connection, the billing address, here again, because probably it may be B2B in many cases, it says the billing address of the service recipient and record has to be the place of supply. For all your mobile, internet and D2H prepaid vouchers, and if it is happened to us, if this sale of vouchers happened to a distributor or a selling agent, then the location of such distributor or selling agent becomes the place of supply. And if it is happening to any other person, then the location where such prepayment is received or the vouchers are sold becomes the place of supply. Now, a prepaid service where such voucher is booked through an online internet mode or a banking electronic mode. In all such cases, it is said the location of the service recipient on record becomes the place of supply. Earlier, prepaid voucher was a physical voucher. The last basket deals with the online sale of a prepaid or service for a voucher. Banking services, again, here it is a hybrid mechanism. It says that if the banking services or the stockbroking services is provided to a customer and such service provider has an address available on record, and the location of the recipient available on record becomes the place of supply. If you don't have the address available on record, then by default the location of supplier becomes the place of supply. Lastly, the insurance services is similar to what the banking services. It says if the services are being provided to a registered person, then the location of receiving becomes the place of supply, and if it is provided to an unregistered person, then the location of recipient available on records of the supplier becomes the place of. Because in insurance services generally they would have the address of the person on record. It is not a case that they would not have an address. Therefore, accordingly, the place of supply has to be identified. So, with this, we end our agenda of the place of supply. Now, what are the key takeaways? Well, the place of supply provisions are very important to identify that what tax I have to charge, C plus S GST or IGST. it helps us to determine that what will be my invoice, what will be my tax type, and if there is a wrong tax type, then the state government which is deprived of the revenue will always come back to you and ask you to pay the tax again. So if you are in Maharashtra and if you have by mistakenly charged IGST, IGST may go to where the IGST is not under the control of the state government, as we all know. Probably the state government, if it identifies that you have wrongly determined your place of supply, state government will ask you to pay correct tax, that is CGST plus SGST again. Of course, we have a provision of that is Section 77 of CGST Act and Section 19 of IGST Act. It says that if there is a place of supply wrongly determined and for which you are required to pay tax again, then you will get a refund of the tax which is paid earlier by mistake. But the provision says that you have to pay the tax again. So we all know that this refund mechanism is again very painful. Of course, it also says that you will get a relief for interest, that is interest is not payable in all such wrong identification of tax type or place of supply. But there are some pain points, and that is where it is important to identify that what will be my place of supply in all such cases. On your inward supply side, if you see if a POS is wrongly charged by the vendor, say I am in POS is wrongly identified by the vendor. Say if I am in Maharashtra and my customer has charged me IGST, sorry, my vendor has charged me IGST. My vendor is in Delhi, he has charged me IGST, but by mistakenly he has put place of supply as Gujarat. Though I am in Maharashtra, though IGST is by, as we say broadly in the general terms, we say that credit is available. But if the place of supply is mentioned by the vendor on his invoice as Gujarat, then there are chances that the government may deny you credit, saying that this IGST has not flown to Maharashtra, this IGST has flown to Gujarat, therefore credit is not available. Therefore, friends, it is very much important to identify on both on your outward supply and your inward supply whether the place of supply is correct. On your inward supply also, you need to check whether the vendors have correctly charged place of supply or not in the invoice, and also is the place of supply correctly reflecting in your GST. With this, friends, I end my session today. We can take up specific questions if you have on this topic. So no questions. Thank you so much everyone for participating. We'll end the session.